Good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live here on June 1st, Saturday, 2019. Great to have an epic turnout, too. It's always nice to see a lot of you here. Do register at TradingSuccessSummit.com. I've got lots of great speakers in a nice, fast-paced half-hour event. You can go to www.tradingsuccesssummit.com, so all that in a .com, or worldstoptraders.com summit. And I'm really thrilled to have some of the world's genuine top experts: Tom Sosnoff, Larry McMillan, Steve Nissen, Harry Boxer, Tony Turner, Barry Burns, and myself. It's my first ever multi-speaker event, so I wanted to come out of the gate swinging, knock out a home run. So I don't have lame-ass speakers who are doing hour-long pitch fest on PowerPoint slide crap like we've all been subjected to in the past. Instead, we've got the world's tops, the sharp people actually genuinely add value that I've personally learned from, like Tom Sosnoff, Larry McMillan, Tony Turner, Harry Boxer, Barry Burns, Steve Nissen, and myself, all the aces in the deck. And so I really want to, do a good job of helping you folks get good training, lots of stuff. We'll have prizes and giveaways, and it's absolutely free. So the price is right, 30-minute presentations to keep things focused and action-oriented. Before we continue with our broadcast, normally my deadlines are always 100% firm, but I've gotten some people squawking that they hadn't gotten my emails lately. Let me know a quick question. Are you getting my emails? Type Y or N, because I've been getting a lot of people, like in my webinars, they'll say I didn't get the email. Or, how many of you are getting my emails? Y or N? I'm seeing a lot of, they get misdirected to spam or trash, especially for like AOL and Comcast and SBC Global and all that. But if you're not getting my emails, at least type in N so I know. Anyway, for that reason, I will extend the deadline on this till lunchtime today, till noon today, at the Trade Mastery Golden Ticket link. It's only $97. A lot of you just joined. A lot of procrastinators. A lot of people joined yesterday afternoon, and that's fine. I get it. We're all busy. You can get a whole month access to swing scans, breakout mastery, small cap scans, trading the open, my live room, 5 days a week, non-recurring one-time fee. So it's the cheapest I've ever offered access to give you kind of a sampler pack without worrying about canceling a renewal and all that kind of stuff. So that's at trademastery.com/golden ticket. All right, well, let's get on with today's broadcast. As always, all information is for educational use only. We're going to look at our S&P key support resistance levels. We're going to look at hot sectors and strong charts right now. I've done thousands of real money trades with the commissions paid to prove it. So the S&P is one of my longtime 20-year traders, Mukesh, had noticed we did, good observation, man, we lost the 200 SMA yesterday. So that's going to lead to what? Do you think we're going to get a gap up or a gap down on Monday? Probably a gap down. We may get a recovery gap, but it's more likely to gap and continue to crash. The stock market's officially in correction mode because we lost the 200 SMA, right? So for that reason, we want to be cautious next week and figure out what's worth trading. Now, I like trading inverse instruments that go up when the market sells off. You can see a few of them here. Like TZA is a favorite. It's been going up nicely. QID, TZA is okay. QID is much better. It's got a really wide range. And look at the multi-week uptrend. That's a trend that you can focus on, the very strongest. Well, most of you are getting the emails. I'm not seeing a lot of emails. Hey, Guillermo. Question from when is the Trump bull market over? Market will tell. We'll see. It's we got a reaction. I think the reaction to the Mexico, tariff and all that. Between China and Mexico tariffs, that's causing uncertainty in the markets. We may well see a summer sell-off. Bum, 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 bum. Live from New York, it's the stock market sell-off. And you too can lose your shirt if you're on the wrong side of the trade. So don't F it up. Stop the madness. There's got to be a smarter way to trade. I'm an expert in inverse ETFs, baby, and that's what you want to focus on. Whether you're trading VXX, which is back. They halted it after 10 years, turned into VXXB for a few confusing months, but now VXX is back. I trade TVIX daily myself. FAZ is okay. Starting to bounce a little. The SQQs is better. Right? You got really good upside plays in the whole array of inverse ETFs. From a sector standpoint, when the stock market sells off, what goes up? Oil or gold? Inquiring minds want to know. That'd be gold, baby. And so we got a rally move up in Nugget yesterday. I called it long and right for my traders over 1630, which is where I bought it yesterday. Boom! He knocks it out of the park. He shoots, he scores. The crowd goes wild. So gold is continuing to be strong. So the gold ETFs like Nugget and JNUG, GDX, GLD, AU for an AUY Yamana, the cheap instruments. But I like Nugget. That's my favorite. I used to trade GDX all the time. That was my favorite, but now it's Nugget. It's got the best percentage range, up 6% off its close from yesterday. JNUG even a little better, up at 7.25%. Now oil has been going down. Bum, 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 bum. Now I've got a question. The one and only trade that I put on for an overnight hold, and I may, screw the pooch on this, but I bought 50 shares into the close of this guy because I thought it was a tad oversold. Now it's probably going to gap down to like 9, and I'll go like Homer Simpson. Dope! I hate when that happens. But some of them ran from 17 to 12. That's a little extreme. They're shorting crude all day. Now, I was trading DWT to the upside for day trades, and I called this long from members from 840, which finally hit late in the session and ran up to the whole number 9 resistance. This is the short crude oil ETF of choice, our weapon of choice. Knocked it out of the park, baby. It was a $6.50 instrument Thursday. It ended up as a $9 instrument yesterday into the close. I never buy 9s. Otherwise, I would have done an arbitrage play and traded them, bought some of both, and then scaled in on Monday or Tuesday for swing trades, the one that keeps going up. But I never buy 9s. I have the specific entry trigger on this guy for a swing trade exclusively available for my small Swing Scans members, and we'll go over that for Swing Scans members only in about 20 minutes. But for all of you who are here, as my guests and everything, those are the ARB plays, right? Arbitrage plays. DWT versus UWT. How many of you think that's a bad buy? I would kind of chastise myself. I would probably give it a 60% odds of, only maybe 60% chance that it'll come back to life and be back at 14 sometime next week for a swing. Maybe a 40% chance it'll keep dropping. Show of hands. Was this a good buy or bad buy? Type in the word good or bad. That's the single and only overnight hold I've got. It's just 50 shares, little bitty baby trade. I'm not going to go 300 or 1,000 shares deep because it could gap down to 11. But was that a good buy or a bad buy? You tell me. I mean, time will tell. But I'm very transparent in my entries and tell you guys exactly what I'm doing. But that's the chart, and it's getting near support. It had been inside. I'd called the long for everybody from 1050 and called the exit at 19. That's where I said to sell it because I didn't want to hold over a 20. So I always sell 9. So I got you guys in almost a doubler, 1015 to 19. For all of you who've been with me the last couple of months, remember I told you this back when it was down at 10.5. I said, actually when it was 9, I said it would be a good play over, say, 1050 or so. And we got out right under the 20 at 19. I put on a 50 share trade. It's somewhat likely to go back down to 8, or lower. So maybe I'll get stopped out. Won't be the first time. Won't be the last time. I get stopped out every day and loving it. Sometimes like Get Smart, you say, missed it by that much. Sorry about that, Chief. What do you guys all have to say here? Wow. UWT. I got about 50-50 Well, that's interesting. Okay. Think not just yet. Yeah, large sell volume might get a bounce. Big banks selling off, could be bounce trades this week. Good point, Phil. You're right, man. Hey, good morning, Ahmed. Good to see you. Hey, Guillermo, right. 5 key traits of a successful trader: consistency, discipline, confidence, patience, and passion. And itty-bitty stops in position sizing and scaling. Speaking of which, I will likely buy me some nugget if it keeps going up. On the longer term chart, it's coming back, right? If you look on the 1-year chart of NUGT, or gold instrument, I don't have edge here though. I don't have an edge. I always ask myself as a trader, where do I have an advantage? Where do I have a clear edge from a price action standpoint? And when stuff is already moved and it's now in a middle of a trend, that's usually not an advantage. I play the corners. And like for those of you fellow, I used to be a statistician and quality engineer at the Ford Motor Company, and I'm a complete numbers geek. And if you remember your bell-shaped curve with a normal distribution, I like the outlier points, right? And I buy and sell into the mean. So the point is, we may be in a middle range here. I like the fact that we recovered both the 200 and the 50 SMA. The next long trigger in this would be if it climbs over 18. But right now is not a really good place for a swing long in Nugget. It's great for day trading, but resistance is so close, just up at 18. That's a major moving average resistance point, and we're getting close to that, right? Everybody see that? So we only got about 50, 60 cents to go before we knock our head on resistance. Boom. So don't buy right under resistance in a trading 101. But did you think to pull up your moving average chart like this? So somewhere over 18 makes sense, but not under 18. Major resistance is way up here at, what, 22, 24. So we have a couple of points to play with, but I'm not going to swing trade this guy just yet. Let's take a look at some other Rockstar charts. So that's our sector industry group. We're currently long bias gold and short bias oil, but those could reverse course next week. And because they've had such sharp moves, often you get a reversion to the mean after sharp moves. Another quick reminder is, after a large candle day, a big multi-point day, or a big percentage gain or loss day, you usually get a resting day. Just like after a big gap, you usually get either a mean reversion or a slight pullback. So be on the lookout for this pattern. This is a bullish engulfing right here, but we got a large green candle followed by, and thanks to Steve Nissen for showing me how all that stuff works. You guys got to learn candlesticks exclusively from Steve Nissen, no one else. They all just like read Steve's books and tried to copy him. Badly, I might add. I constantly spot errors, but even my limited knowledge of candlesticks, I've been working with Steve Nissen almost 20 years now, and I only know like 5% of what he knows, but I know enough to, when I look at the other educators, they constantly screw the pooch. They calling dojis reversal places, and they make up names for candle patterns that don't even frickin' exist. Stop the madness. Learn from the people that actually know what they're talking about. You know, if you want to learn options, learn from guys like Tom Sosnoff, Larry McMillan, Price Headley, Dr. J, people that actually know their stuff, right? If you want to learn stock breakouts, learn from guys like myself and Harry Boxer. If you want to learn ETFs, learn from folks like Tony Turner. You know, people are real experts in this stuff. Anyway, the point is, we're pattern day traders and pattern swing traders. We've got about 5-6 minutes left. Let me know if any quick questions. Anyway, before you put on a trade, consider not trading if it's the day after a big moving day. Okay, so if you had a big candle day, occasionally you'll get a continuation like this, but usually you get a small resting day and often a pullback. So don't get all excited. Wait till the second day after a gap or the second day after a big mover day. You see this pattern time and time again. When we look at Legg Mason, you can see in its chart it's pulling back a little bit off its earlier breakout. But for continuation, this is one that I've been calling long for you guys for quite some time, and it's worked out really nicely. It's gone for our traders up from the hammer low of 27. It's hammer time. Ba, 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 da, ba. Don't get me started. Anyway, it's hammer time, and boom, off to the races. But this is all quiet, sleepy. They don't know what the blank they want to do. Shut the front door. When you see flat melted candles and doji and lots of shadows on the upper and lower portion of day after day of candles like we saw in the market, the S&P a couple weeks back, not a good time to trade. You don't have edge there. The buyers and sellers are kind of on the fence trying to decide what the heck they want to do. And the biggest red day on the 90-day, well, I guess it ties for first place here, was yesterday. So we don't want to play this until it breaks out. Not a trade recommendation, but I'm going to wait till it breaks 38. But I do like the fact that it ran up 10 whole points. Another chart in the potential oversold category, which I tried to trade yesterday. I think I got stopped out in it. I don't recall offhand. It's either small win or small stop or scratches. Manini, it was small. But this guy ran from 24 down to 20. UGAZ, right? Like UWT, it's something that's sold off so sharply. Kind of like the equivalent of something does a vertical drop and then bounces off a key support level. That's like right here, right? A vertical drop and bounces off a key support level like near a whole number to mean reversion pivot. If we have a big drop like this, something point-wise, it's gone from 24 to 20. I mean, that chart's more likely to go to 18 than 22, but it is on my radar for potential bounce for either a swing or a day trade because of the point range. Remember, folks, point range equals profit potential. The bigger the point range, the more profit or risk or loss potential, right? So you want to trade charts with the best volatility. Hey, Bill, with the last few weeks of sell-off, and again, sorry, I'm going to apologize in advance for not being able to answer all of y'all's questions because we're in session. Let's see, with sell-off, do I see reversal back to the upside? Not unless we recover and hold above the moving average lines. That's a smart question. With the S&P dropping like it has lately, you're going to see institutional short covering and money flow come back into the capital markets only if we recover this. And I'm going to personally use the specific trigger I've got for my Swing Scans members, but the hint is we want to get above both of these moving average lines up in this region before we consider a bounce. Don't be too keen to play bounces because look what happens to the last time people tried to play a bounce. It's a dead cat bounce. Epic fail. Dump, like a basketball that's going down a staircase. It bounced and it kept going down. So we'll likely see bounces that continue on down. Another quick tip, for day or swing trading, I have not seen a lot in the way of pivot reversals that are sustainable. They've been very quick and short-lived. So if you do play pivots, use a compressed time frame to manage your exits intelligently with very tight stops. Better to just wait for directional breakouts to the upside. Don't be keen on playing pivots. Even though stuff looks cheap, I'm talking to myself here too, with my UWT trade, but it's got to be extremely sold off with a huge move and some convincing volume on the pickup, right, on a reversal. You know, when volume starts to increase compared to on the way down, you've got bigger short covering, short squeeze volume lifting an instrument back up. That makes sense to go for. You're right, Bill. Yeah, I wanted to get over it's the 200 and the 100. So it doesn't have to get over the 50. The 200's in black, the 100's in blue here. So somewhere north of 2810 would be the very earliest that I'd consider a recovery to qualify in the S&P. That's a smart question. That's a smart kind of question that the trader should ask, right? What are the signals? You want to be a conditional trader, if-then trading. If the S&P keeps dropping, I'll keep buying the inverse ETFs or buying puts. If the market reverses back above major moving average lines, okay then, and holds for a couple of days, then maybe I'll consider putting on longs. All right, we're about out of time here, folks. Let's see. What are the two strongest sectors? Right now, gold is the only strong sector. None of these sectors in the stock market are strong right now. Everything's selling off. So you have to look to commodities and ETFs. There's some really good ETFs out there to trade that are going up spectacularly. You may want to follow, for a hint, things like the bond market or specific commodities or currencies. Now, I've got some very good ETFs for long plays that I've identified very painstakingly and carefully for the benefit of my Swing Scans members coming up in a few minutes. So for those of you who are members of Swing Scans, we'll be covering those momentarily in a few minutes. But no regular sectors like semiconductors or pharmaceuticals or biotechs, none of that's strong. Everything's, even the insurance sector that had been strong is down in the muck. So caution, we may see a sell-off summer, right? Right. Good question from Harvey. With the market down, why isn't TVIX up? It's because the volatility, the intraday volatility, has still been kind of low. See how flat, and that's a smart question too. TVIX is just barely bouncing. Other inverse ETFs like QID, SOXS, SQQQ are much better trenders, but TVIX will explode to the upside significantly if the market keeps dropping. But the reason is because the intraday volatility, the VIX, which is from which the TVIX and other instruments are derived, the intraday volatility has been compressed. We've seen relatively choppy, flat S&P days. We've had a couple of hot ones, 1, 2, 3 out of the last 15 or so. But look at all these doji, right? We've had very compressed, like yesterday was a do-nothing day. Thursday wasn't much better. Wednesday wasn't great. Tuesday was the big sell-off day. Monday wasn't good. We just had one big range day. So the VIX ETNs like TVIX and VXX and UVXY and alongside the SVXY are good, best traded when the market has big trading ranges. But when the market's slowly stair-stepping with compressed ranges, that means its internal volatility is lower, and hence that's why things like TVIX are not trending strongly on a bounce yet. They're trying, and keep them on the radar. I'm going to start developing. I'm not in overnight in any of the VIX ETNs currently, but I will start initiating new positions, especially if TVIX gets north of 30. So, but yeah, good question. Hey Judy, let's see if you bought the last deal for $4.95. Are we Swing members? No, I've got both. I've got the Trading Open Live Room, and that's separate from Swing Scan, so they're separate memberships. I'm thinking of trying to combine everything into one, but it would cost more. So instead, I've got very cheap pricing, only like $4.95 for 6 months for either the swing or the intraday things. I should be charging like $2,000 a year for each, but it's really cheap. So yeah, everything's sold separately. But you can get the quick final call to action here. I'd be remiss as a business owner if I didn't. You guys, the deadline was last night, but because I've got quite a few folks I could see emails hadn't been opened and the deliverability was low yesterday. So for that reason, I will leave this open on the table just until noon today, and then it'll have let's see, I'll probably just take the page down. Or it'll have the congratulations to everybody who ordered. But if you're not yet a member of the golden ticket thing, I'll leave that open only until noon today, East Coast time for you folks. So basically after Swing Scans, I'm going to take this down. So do order that for access to all 4 of my services for a 30-day window. And it's only $97, and you get, it's over 20 hours of training with me. So it's a good deal. And that's at trademastery.com/gold ticket. Anyway, until next time, be careful out there, and remember to keep your stops small. And well, a lot of new folks, thanks. As you're looking for new plays, look for directional volatility in specific sectors. Whether things like gold are going to continue up like it did yesterday for us, going to be determined. But do focus on clean charts that have good directional volatility. Avoid the cheap charts that do the gap and crap dance that chop around. There's a lot of bad young day traders out there who are on social media making all these phony performance claims. I made $3,000 trading 5,000 shares of a $2 stock. If it sounds too good to be true, it is. There's always more to the story than what they tell the public. Like they have a Confederate trading a mirror account behind the scenes, so they go opposite of what the live room person is doing. And all kinds of shenanigans out there. Instead, focus on charts that give you an edge, that have good, strong, directional, multi-point trading ranges, that are still inexpensive, under $20, $30 a share, but have good high volume and good directional volatility. That's where, at least that's where my edge is trading small gaps that continue like this. That's my number one edge as a trader. Remember when I first met Harry Boxer, the first question he asked me brilliantly was, what do you trade? How do you trade? And that's how you get to know a trader. And I said, stocks in the $15 to $40 share range with small gaps that continue up. That's the playbook. That's the number one type of play that you want to focus on. So in the live room, I do cover the small caps if we see exceptionally good $3 or $4 stocks, but mostly I like things like this that give you a better edge, a nice 50-cent in a row run, or swing trades that have a nice big multi-point range to focus your energy on. So anyways, with that, I've got to run. I've got swing scans coming up. Best wishes for success in your trades, folks, and I'll see you next time. Take care, and bye for now. And I apologize if I didn't have a chance to answer all the questions, but I only got 20 minutes here, so have a good week ahead. And I promise my training is really good. I don't make any phony baloney performance promises or claim I'm making thousands of dollars a day trading cheap stocks. None of that foolishness. But I am a real money trader, right? And I've got a boatload of experience with P&L proof that I actually do thousands of trades, right? This year. So anyways, y'all take care, and I will see you next time. Learn from my experience, both my wins and my stops, of which I have plenty of both to share with you. And the goal is to help you accelerate your learning progress so that you make bigger winning trades more often a way of life, and use a good healthy dose of position sizing and scaling to manage risk and volatility intelligently. Okay, well, take care, and I'll see you guys next week. Until next Saturday, trade with passion, trade with street smarts, trade with small size. Test out a strategy that works for you, and let's go get them. Take care and best wishes. Bye for now.